Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a special Friday episode in the world of cannabis. Now, before we jump in, if you enjoy this video or you learned something, please just leave a like on it as it really helps out my channel. And of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos, but then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes over time to learn about the evolution of the industry, identify top players that you keep seeing pop up, and take advantage whenever you're ready. We're going to start with this update from Todd Harrison that he published yesterday. And so while initial reports did indicate that we could see some action on the MORE Act in the House as quickly as Monday, that then got moved to Wednesday. But thank you, Todd, for sharing that the key House committee, the House Judiciary Committee, has formally cleared the federal cannabis legalization bill known as the MORE Act for a floor vote this week, and a full chamber vote is expected today on Friday. And so while I'm announcing this, it'll be announced later after I publish this, but I will confirm on Sunday whether that passes or not. Mind you, all expectations are that this will pass out of the House without any sort of difficulties. And so I wanted to share this one from Denis Rudev. So thank you, Denis, for sharing this update from Cowen on the MORE Act and U.S. cannabis. So you can pause to read if you're interested, but main thing, the update, expect the House to pass the MORE Act on Friday. Lack of GOP votes, not a worry in the House. Of course, it is in the Senate, but we'll cross that bridge when we come to it. And so wanted to share just a bit of snippet from CNBC and other news outlets that are sharing this positive awareness about the plant, as cannabis stocks are hot ahead of House panel hearing on a federal legalization bill. This was more applicable to last week, maybe not so much this week, but hopefully it's a bit of foreshadowing to come. And while I don't have a subscription to Bloomberg, just wanted to highlight that they also do highlight cannabis legalization bill is set for a House vote this week. So good news is that that vote is coming today, and we'll have some news later on. Well, we've got this interview from Yahoo Finance with Kim Rivers, CEO of Trulieve. And so before we jump into the Trulieve's Q4 and full year 2021 results, I just wanted to share Kim Rivers' perspective on how the company's adjusted to the purchase of Harvest Health and Recreation, which was obviously a big deal because you're buying a company for $2.1 billion, then you're taking all their retail locations and trying to integrate it into your company while spending as little money as possible in order to do that. And as investors have taken a liking to Trulieve over the years, myself included, because they continue to focus on fundamentals and manage to post profitable quarters quarter over quarter, it's worth noting that Q4 is the first quarter in many years that they've not posted a profitable quarter and brought in cash flow from operations. Now, I don't think that is a cause for concern as a longer investor that tries to focus on the year over year versus the quarter over quarter, but do keep in mind, despite this one unprofitable quarter that they did manage in Q4, their full year was still profitable and they did still manage cash flow from operations despite bringing in this new company and all the costs involved. So I'll let Kim share her views.
Cannabis player Trulieve is out with earnings, delivering an 81% sales increase for the fourth quarter. The company is looking for more than $1 billion in sales this year as it expands the number of dispensaries. Joining us now is Trulieve's CEO, Kim Rivers. Kim, good to see you here this morning. 81% sales increase, very strong in a very competitive market. How did you drive that gain?
Yeah, so I mean, it's really our whole strategy is driven on increasing fundamentals and staying true to our strategy that we announced in 2020, which is expansion through a regional hub strategy. We increased both via organic growth and via acquisition. We completed the largest acquisition in cannabis history in October. And so really proud of the team and our ability to execute on the fundamentals. We increased both on the dispensary count and on our supply chain up around 100%. And so really phenomenal year, and kudos again to our entire organization.
Hey Kim, it's Julie here. So you saw that big growth. I'm curious about margins and profitability. You guys are posting positive EBITDA, but still net losses. How are you working to sort of improve those levers on growing the margins?
Yeah, so this was actually our first quarter post of a net loss, and really that was 100% attributable to the acquisition. If not for the acquisition, we would have had another strong quarter of net income. So look for us, again, as those one-time or non-recurring charges flow through the financials, which should be cleaned up in Q1. We'll be right back on track where we have been in terms of profitability, both in the net income line as well as in the adjusted EBITDA or EBITDA line. So, again, just some right sizing as we absorb and digest, again, that very large transaction that we completed at the end of the third quarter.
Kim, just staying on that, what Julie mentioned on margins. So your gross margins were down to 43.4% versus 71.2% last year. Are you seeing any inflation in your supply chain? What explains that beyond, I guess, the acquisitions?
Yeah, so if you adjust out for the acquisition, which we shared on this morning's call, we actually end with approximately, it's about 59% adjusted gross margin. So it's really a 10% swing when we look at it on a quarter-over-quarter basis, again, with that big acquisition coming in. And so the acquisition diversified our platform into additional markets, some of which are not optimized from an efficiency perspective. We will be adding supply chain in those markets throughout the rest of the year, and we do expect those margins to increase throughout the year. We did give longer term guidance, set out 2 to 3 years, with margin profile that we expect to hit at 60% at minimum on a normalized basis, along with 40% minimum EBITDA, which we believe is very achievable. To answer your question specifically about inflation, again, it's very different from market to market. Keep in mind that, of course, cannabis still is illegal federally, so our ability to have distribution continuity across the U.S. is non-existent. And so we do have, again, differences from market to market. What we're seeing is not necessarily an impact in particular basket sizes per se, but what we are seeing is consumption in general has softened a bit, coming off of the highest consumption time frame that we've seen as an industry during COVID-19. It makes sense rationally. Folks are stuck inside their house and have more time during the day, whereas now, again, that's normalized. You add in inflation, you add in choices that consumers are having to make with expendable dollars, and the fact that our industry is primarily a cash business. Certainly, we have seen a little bit of softness as it relates to consumption, but again, not on a per transaction basis, just less consumers entering our slower growth period.
And we're going to save questions.
You mentioned, of course, the fact that it's not legal on a federal basis, and we've been talking about this issue a little bit this week because the House is voting on the MORE Act, which would decriminalize marijuana. From what we've been hearing, pretty standard view that we're not going to see federal legalization this year. If we did have something like safe banking pass, which prospects for that perhaps a little bit better, what does that do for your business?
Yeah, so the banking, as we've just mentioned, it's an all-cash business currently. So having banking relief would do a number of things. First, it would hopefully allow us to expand payment options for consumers, providing greater access to cannabis across the country. It also would lower our cost of capital by allowing our access to typical lending rates. We have been subject to higher rates due to the fact that we are limited in terms of our banking partners currently. So having a more diverse network of banking options would certainly improve cost of capital. What we would love to see is some relief from a tax rate perspective, along with safe banking. Currently under 280E, just to give you a number around that, last year we paid a significant amount in taxes. I believe there was over about $7,500 million in tax.
Now, there's a big difference between 75 million and 100 million, but I think I get what she's saying.
That we would not have had to pay had we been not taxed under 280E. So significant changes to our financial profile would come with the passage of safe banking, along with some additional federal reform. I would like to note, though, that I do believe that it's incredibly important for us to not only focus on safe banking, but certainly there I believe needs to be some form of criminal justice relief with letting out and expunging records. There should not be anyone behind bars for cannabis distribution or sales, given the fact that here I'm sitting with you on Yahoo Finance and in this seat selling cannabis in legal markets in the state structure today.
I think everyone gets that except POTUS, so we'd love to see some action and for him to keep his campaign promises. And so on to this one from Trulieve, as Trulieve caps a transformational year with record fourth quarter and full year 2021 results. And so just for the main highlights, record revenue for the full year, $938.4 million in 2021, up 80% year over year, and quarterly revenue of $305.3 million, up 36 sequentially, helping give them an industry-leading U.S. retail network of 162 dispensaries, up 116% from 2020, supported by over 4 million square feet of cultivation and processing capacity, up 107% from 2020 as of March 30th, 2022. And so for the full year financial and operating highlights, you can pause to read if you want to get all this information, but we're going to go through their comprehensive income statement. And so there's a bit more there if you want to pause to read. While if you just want to look at the Q4 financial operating highlights, you can pause to read as well and get the gist of what happened in the most recent quarter. And then recent events as well. I have reported this over the time as the industry has evolved, but of course you can pause to read those as well. And so management commentary, you can pause to read that, but I just want to focus on their financial guidance, as Trulieve is introducing 2022 guidance with expected revenue in the range of $1.3 billion to $1.4 billion, and adjusted EBITDA, or earnings before interest, taxes, depreciation, amortization, in the range of $450 million to $500 million. And based on our current forecasts, we expect to realize improved performance in the second half of 2022 relative to the first half. And so again, while all projections are sort of nice wishful thinking, but we don't know if they're actually going to meet them until we get there, just wanted to share that, as this is lower than what they had anticipated, I think, previously. But regardless, it's still a significant increase to their 2021 revenues, and I suppose it is better to aim low and be a bit more cautious so that you can actually exceed expectations as opposed to aiming too high. And so let's go through their comprehensive income statement, and we're going to go through their 3 months, quarter over quarter, this most recent Q4 to last year's Q4, and then we're going to look at the full year where the numbers are just a lot better overall. And so revenue this quarter, $305 million, up from $168.4 million, which represents an 81% increase, and of course with a lot more retail dispensaries. However, gross profit increased just 10% to $132.4 million, up from $119.9 million, while their gross margins for this quarter were affected down to 43% from 71% last year. And so this is obviously where investors were like, well, we want to keep 71% margins, of course, but if you're buying all these new dispensaries and trying to bring them in, you're going to be spending money in places where you might not have foreseen it. Obviously, that's why you do your research before you buy a company, so that you try to spend as little as possible, but some expenses will pop up that you did not account for. And so that's likely why the margins were so differentiated. For an adjusted gross profit of $180.6 million, up from $121.7 million, which is a 48% increase year over year, which is helping them boost their adjusted gross profit margins up to 59%, but still significantly down from 72% that they had Q4 of last year. But from my understanding, and I don't know how they do these calculations, but this is in line with what she said in the interview. Had they not made that Harvest acquisition, this would have been their gross margins, despite the circumstances of Croptober and any supply chain issues that they might have faced. But of course, with the acquisition, that is why they see significantly less gross profits and a lessened gross profit margin. Now, if we look at operating expenses, this is one of the other cases where it did increase significantly, up 169%, which we don't ideally like to see, but because of the acquisition, that makes sense, where they spent $150.6 million in this recent quarter, as opposed to $56 million in Q4 of 2020. And so for that reason, their operating expenses did make up 49% of this revenue, versus 33% of revenue last quarter. But again, as she mentioned, they'll likely get back on track in Q1 of next year. And so that is for the first time we've seen Trulieve in many years suffer a net income loss of negative $71.5 million compared to positive $3 million that they had in Q4 of 2020. But an adjusted net income they did manage, I guess, if you adjust and do some calculations, for a positive $1.8 million, but compared to $41.8 million of last year, that is a decrease of 96%. While their diluted shares outstanding did increase to 145.1, up from 119.4 last year. A bit of dilution, and while that does suck, it does seem like it is worth it to bring in those Harvest assets to compete to be the number one MSO. And so just to share that they are preparing for generally accepted accounting principles, as well as they share their earnings per share for the most recent quarter, which again for Q4, negative 49 cents compared to last year, which was positive 3 cents. But adjusted earnings per share, had they not made that deal, would have been a positive 1 cent. And adjusted EBITDA then would have been positive $100.9 million, and it would have given them adjusted EBITDA margins of 33%. Compared to Q4 2020's adjusted EBITDA margins of 48%, and this is prior to the Harvest acquisition. So let's look at their full year 2021 compared to 2020. They increased their total revenue to $938 million, up from $521 million, which is an increase of 80% year over year. So obviously the revenue is heading in the right direction, while their gross profit increased 566.1%, up from 386.4%. Again, heading in the right direction, an increase of 47% year over year, and helping them still maintain gross profits for the full year of 2021 at 60%. And while that is down from 74% last year prior to the acquisition, I'd say this is still very impressive, because despite what they saw in losses in the Q4, it just goes to show how well the management and the margins in Q1, Q2, and Q3 from earlier on the year can help offset, any of the costs that the acquisition helped to bring them. And so from my understanding, again, adjusted gross profit, had they not made the acquisition, they would have been up to $621.4 million, up from $389.9 $49.9 million, which is a 59% increase year over year, which would have given them adjusted gross margins of 66 as opposed to 75, while their operating expenses would have been significantly less at just $369 million, up from $168 million, which is a 120% increase, helping them bring down the total percentage of operations for the full year to 39%, which is certainly an improvement from this 49% operating expenses, which was certainly an anomaly and because of the acquisition. So it just brings back to what they would have been at last year of 32% prior to the acquisition. And so we take a look though, all in all though, for the full year, they still managed to bring in $18 million of cash flow from operations, which is again down from last year of $63 million, but again, because of the acquisition. Had they not made the acquisition, they think their adjusted net income would have been $123.4 million, up from $120.5 million last year. However, their diluted shares outstanding does increase for some reason from 145.1 to 146.8. I'm not exactly sure why that is, but it's probably due to some share-based compensation. But regardless, when you consider that they purchased another MSO during the year for $2.1 billion and integrated some 50 plus dispensaries under their Trulieve umbrella to become one of the dominant MSOs so that they can compete over the next decade, I think it's very safe to say that for their full year, even though it's down from 2020, still very impressive that they managed a positive 12 cents in earnings per share. And had they not made the acquisition, their adjusted EPS would have been 84 cents with an adjusted EBITDA of $384 million for adjusted EBITDA margins of 41 million, which is certainly down from 50% last year, but nonetheless a little bit better than what we saw for Q4. So all in all, as a Trulieve shareholder, I'm quite happy with their full year and how they've managed to integrate the harvest assets into their own business. But I do want to ask you, whether you own shares in Trulieve or whether you don't, do you think Trulieve is better off or worse for having made this harvest purchase? Let me know in the comments what you think. And I just wanted to scroll down to show you some of their cash flow from operations, because traditionally, I think this is what investors have liked, is that Trulieve does manage to bring in cash flow from their operations. As we saw Q4 2020, they brought in $26.8 million from net cash provided by operating activities under the generally accepted accounting principles, while for this most recent quarter, they did lose $62.2 million in cash flow from operations, again though, because of money that they likely had to spend bringing in the new harvest acquisition. And so as we can see we can see down here some charges: inventory step up fair value, $38 million there, while transaction, acquisition, and integration costs, $30 million there. And if we compare year over year, obviously they had more cash flow from operations in 2020 than this most recent year prior to the acquisition. But we can look down and we can see some inventory step up fair value cost them $41.2 million, transaction, acquisition, and integration costs roughly $48.7 million for the year, COVID related expenses $6.2 for the year, impaired long-lived assets $5.4. And so again, Kim says this is an anomaly for Q4, so we'll just have to look out in Q1 going forward. But just main thing to highlight is that they have anticipated in their guidance, that they will expect to realize improved performance in the second half of 2022 relative to the first half of. So we just got to keep our eyes peeled as we go forward. But wanted to share this one from Time Magazine, as apparently Curaleaf has made it into Time's 100 most influential companies of 2022, much like Tilray made it into this one for 2021 last year. Now do keep in mind, I believe not just Curaleaf, but all companies that want to be featured in Time Magazine do have to pay to be in here. So it's not free for them to get in here, but it is good exposure for the company regardless. So good job, Curaleaf. And lastly, just wanted to share, not lastly, but just wanted to share this one from Advisor Shares actively managed ETFs, as they did have their Alpha Nooner interview with Boris Jordan on March 23rd, 2020. Now previously, I could not find a recording of this, but they recently shared this one. And so if you did want to watch that interview from March 23rd with Boris Jordan, chairman of Curaleaf, I would recommend watching that. You can grab that link below. And so a few more stories just to highlight before we round off from Marijuana Moment. As pro-legalization, GOP Congressman's office explains the opposition to cannabis bill and offers some resources to colleagues. So just wanted to try and provide some context onto what it's like dealing with both sides in Congress, as a letter from the office of Rep. Dave Joyce, a co-chair of the Congressional Cannabis Caucus and a Republican, says he remains willing to serve a resource for anyone looking to talk through cannabis policy issues as the chamber gets ready for a floor vote on the Cannabis Opportunity Reinvestment and Expungement Act from House Judiciary Committee Chairman Gerald Nadler. This comes a month after Joyce separately sent a letter to Nadler expressing his commitment to ending federal cannabis prohibition, enacting sensible regulations, and reversing the injustices that have resulted from nearly a century of cannabis criminalization. That letter to the sponsor says that the outlook for substantial and immediate reform has grown immensely more positive since Dave Joyce first engaged on this issue in 2013. However, it remains clear that at this juncture, any effort of cannabis reform must be substantially bipartisan support to be successful. And so luckily, as the breadth of cannabis-related legislation introduced in the past year alone indicates, this is neither a Democratic nor a Republican issue. It is a bipartisan one, Joyce said, adding that he's willing and ready to work with you to refine the MORE Act so that it can garner adequate bipartisan support. So just wanted to highlight that basically Dave Joyce is saying that he's been sending letters to Gerald Nadler, or at least last month he sent a letter saying, hey, I want to work with you. This has to be bipartisan. So let's meet and try to find some middle ground. But as he says, it does not appear that the offer was taken up, as a newer letter from Joyce's office to GOP congressional staff members makes clear that from his perspective, the MORE Act in its current form is unworkable. As the bill has remained mostly unchanged, but for a few technical amendments since it was reintroduced last year. And as the Cannabis Caucus Republican co-chair, Congressman Joyce wants to be sure all GOP offices are equipped with any cannabis information they need, the letter says. However, Congressman Joyce is opposed to the MORE Act for a few reasons. And so if you want to learn why, you can pause to read. But I just want to share that while it's so easy to blame one side versus the other, oh, it's the Republicans' fault we can't get it done, oh, now it's the Dems' fault that we can't get it done, I just want to at least share some perspective, because as someone that's watched this industry for the last 3 years, and then I've certainly been watching very closely the last year and a half since starting this channel, as a reformed shit lib, and I say that as I've changed my views from watching what Trudeau's done to my country over the last few years, plus seeing all the promises that the Dems have made and failed to keep, while printing 40% of the US dollars in circulation, just crushing the poor and middle class. All I can say from observing is that it seems like the Republicans are actually much more willing to meet in the middle and come to some bipartisan incremental reform than the Dems are, as the Dems just want to keep virtue signaling, and that's all I can say at this point. Do you agree? Let me know in the comments. But some last few snippets before we round off. This is an interview with the CEO of Canopy Growth, David Klein, and of course we know that Canopy has been lobbying for a very long time to decriminalize cannabis or deschedule it in the US so that they can trigger on some of their call options on some US MSOs and get into this market. But I just wanted to share a snippet from this interview, as he says we're confident something will happen soon with U.S. pot legalization, from Canopy Growth CEO.
Look, there just continues to be a lot of momentum built. In my view, there's not a doubt that cannabis legalization will occur in the U.S. It's a function of how we get there from here. I feel that companies like Canopy are really well positioned to take advantage of that when it happens.
And I do want to talk about that, but just to clarify. Because there are all these different moving parts, I don't want to confuse people too much in terms of what has to happen to be able to say full stop, okay, cannabis is fully legal in the United States. But, you guys are a business that has to try to prepare for that eventuality. So is that, something you think could potentially happen within this year, the next couple of years? Are there just political challenges that could make it, the next few years?
We're really hopeful with the introduction of the MORE Act again in the House, and we know that the bill that was announced last year by Senators Booker, Wyden, and Schumer, we think we'll see the Senate floor over the next couple of months. So there's really good progress there. But if we don't get those comprehensive reforms through Congress this year, we're actually pretty bullish that we would at least get some incremental reforms, whether it's around access for veterans or the ability to do research and development in the cannabis space, or the ability to free up banking access for cannabis companies. We're confident that something will happen, but I think this just points to the broader momentum that's building.
And so given that, let's come back to the strategy at Canopy, and you alluded to it, and I think a lot of our audience knows, just based on the moves that you've made, that you're basically at the ready. I wonder if you could sort of walk us through how you can execute in the U.S. market, a massive market, if we get to that point that you were just talking about.
Yeah, so we already have a presence in cannabis in the U.S. Through some of our brands like Wana Edibles, through some operators that we have like Acreage Holdings and TerraSend. So we already have that presence. The thing that's difficult for investors to get their arms around as it relates to Canopy is those financial results don't appear in our financial results because we're precluded from doing so as a result of federal laws. As soon as we get a change to those federal laws, you'll actually see the effect on our P&L, and it's quite positive.
They're hopeful cannabis prohibition will end at some point. It's likely because they've lobbied so much money to make that a reality. I think it is telling that they are confident we will get some sort of incremental reform in the short term before then. And so with that, I just wanted to share this tweet from Jeff Schultz. If you're wealthy, you can be engaged in all of this. But if you're not, there are barriers to entry like getting banking services. And this is the first we've heard of Pelosi mention banking. So I just wanted to share this clip. Why would Pelosi talk about banking while discussing a decriminalization bill? Is there a little bit of foreshadowing here?
This is the decriminalization of it. It's the
term limits, man.
Decriminalization of it. And the fact is many states have already done that. And so this is consistent with what is happening in many states across the country.
Those eyebrows, man.
And it also addresses the injustices of it because of what penalties had been before some of these this decriminalization took place. So I'm all for it. Look. There's so many discussions that have gone on over the years about the use of marijuana or cannabis or whatever. The fact is, it exists. It's being used. We've got to address
it's a medicine.
How it is treated legally, and not in a way that mistreats people on the lower income scale. Not says if you're wealthy you can be engaged in all of this, but if you're not, there are barriers to you getting banking services in order to do it. So it's a fact of life that needed appropriate public policy.
And there you have it. Chuck Schumer remains the biggest barrier for minority entrepreneurs to enter into this industry today as he continues to delay the safe banking. But the good news is you don't need to open a cannabis business to benefit from this industry. All you need is a tax-free investing account known as the Roth IRA in the US. So you go to a broker, you open a Roth IRA, and then you can transfer after-tax dollars into that account, invest in US MSOs. If you're in Canada, you can invest in TFSA. Now, this is not advice, but I'd recommend you can use this channel to watch videos over time, learn enough about the industry to be like, yeah, this is going to happen. Wow, these numbers are legit. Wow, these companies are going to, be the next tech stocks over the next decade. And with that, you can also take advantage. And so lastly, just wanted to jump over as Tilray has announced that they will report their third quarter fiscal 2022 financial results on April 6th. So that will come next week. While after Tilray, we have Verano, as they've also announced they will report their fourth quarter and full year 2021 financial results the day after on April 7th, 2022. And that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or suggestions, and I'd be happy to address them. But besides that, if you enjoyed this video and you learned something, please just leave a like on it. Subscribe below if you don't want to miss any future videos, and I'll catch you on Sunday for This Week in Cannabis News. Have a great weekend, everybody.